Few things are as exciting as starting a new business or expanding an existing one, but nothing that big happens without a little help and a little capital. That's where we come in. Whether you're planning to leave your job and start a business or want to expand an existing one, we're here to make sure you get the funding that makes the most sense for you. So, how do you find money to get your business started? There are four main types of funding: equity funding, debt funding. This includes SBA loans, asset-backed, and self-funding, including 401k business funding. In our introductory overview, we are going to focus on the two most popular funding methods for businesses just starting out: self-funding with a rollover for business startup, known as ROBS, and small business administration or SBA loans. Wouldn't it be great to capitalize your own business with your own money that you already have? There's a path to entrepreneurship that allows aspiring business owners to roll their 401ks over into investment capital. It's called ROBS, which is short for Rollover for Business Startup. ROBS was created with the ERISA Act in 1974 and is governed by the Internal Revenue Service and Department of Labor. It allows you to use qualified retirement funds, tax and penalty-free, to start your business debt-free. At FranFund, we've streamlined the ROBS process in a way that's easy for new and experienced business owners alike. It's called the FranPlan. Our industry-leading plan lets you invest qualified retirement dollars into your own business, tax-deferred and penalty-free. With our FranPlan, you can invest in a new business without losing hard-earned savings. You can also continue to invest tax-deferred funds to grow your retirement plan for the future. This process follows four main steps. Step 1. Your business must be a C corporation to qualify for 401k business financing, so the first step is to create the C Corp. Step 2. The new C Corp designs and adopts a 401k plan. FranFund's unique design allows for retirement assets to be invested into a newly formed C Corp. The most common plan used is the 401k, but there are other options, including a profit-sharing plan. Step 3. Funds are transferred from your existing retirement account into the new 401k account. Once the funds are in place, you, as trustee of the new plan, will direct how these funds are to be invested. Step 4. The money in your new retirement plan is used to purchase stock in the new C Corp. The cash from your new corporation, received from the sale of the stock, is now available to buy or grow your business. A FranPlan can be completed in as little as 10 business days. At the end of the transaction, your new retirement plan has stock equal to the value of your investment, and your operating account has cash, which can be used for any legitimate business expense such as marketing, inventory, and even your own salary. And because it isn't a loan, there are no interest expenses. This can greatly improve your cash flow. Another great benefit is that your credit score is not a factor. As long as you have funds in a qualified retirement plan, you can use a FranPlan. Your FranPlan works twofold. In addition to funding your business, it's also a place to grow your own retirement savings account. You can enjoy the benefits of tax-free retirement savings while your business enjoys interest-free funding. If you're not quite ready to execute the FranPlan, we offer our safety net program at no cost to you. We facilitate the first step in the rollover process, which is consolidating your retirement funds from multiple accounts into an IRA. This step lets you get a head start with no risk. Even if you decide not to move forward with your business, there's nothing to undo. You can just leave your money in the new IRA or move it wherever you'd like. Unsurprisingly, ROBS plans have complex government requirements. Our third-party administrators are here to maintain your plan and ensure that you have the support needed to keep your FranPlan qualified and compliant. Our ongoing service allows you to focus on running your business instead of worrying about document maintenance and compliance tasks. You might wonder, why wouldn't you just take a distribution from your retirement to fund your business instead of using a FranPlan? Well, let's take a look at an example. Let's assume you have $150,000 in your retirement plan. With a FranPlan, there are no penalties and no taxes, so you have the entire amount to use to fund your business. On the other hand, if you take a distribution before you turn 59 and a half, you will have a 10% penalty and pay taxes. The amount of taxes depends on your tax bracket, but for our example, we are using 30%. So after the penalty and taxes, you only have $90,000 left. By using the FranPlan, you have access to 100% of your money instead of just 60%. Although the FranPlan is a great funding solution, it's not a perfect fit for everyone. That's why we offer a variety of funding solutions, including SBA and conventional loans. SBA loans are frequently used to fund startup businesses. The SBA, or Small Business Administration, is one of the largest government agencies. They provide a guarantee to lenders to incentivize them to lend money to qualified borrowers. So banks have less risk and are more willing to approve SBA loans. Even though many banks offer SBA loans, they can still be selective about the types of industries they work with, the number of startups they lend to, and the kind of business costs they cover. Since FranFund has established an extensive network of lenders who are franchise and small business friendly, we can match you up with the right lender. We offer a robust free approval process, so you can find out early if you qualify for a loan, and you can have confidence in our pre-approvals. The national average for SBA loan approvals is only 37%. The rate for clients pre-approved by FranFund is more than 99%. How do lenders determine if a loan candidate is qualified? Each situation is unique and dependent on many factors, including business type and location, as well as an individual's finances. But there are 4 main areas of focus. Credit. Lenders typically require a credit score of 680 or higher. Equity. You will need up to 30% cash injection. Collateral. Personal assets, such as your home, are required for security. And burn rate. Burn rate is the amount needed to cover expenses such as loan payments, lease payments, and personal expenses for a period of about 9 to 12 months while your business is just getting up and running. Again, these are the general areas banks consider. The FranFund loan experts will work with you to create a compelling loan package and present it to lenders to obtain the best rate and terms for your situation. We have talked about the FranPlan rollover and SBA loans separately, but you may decide to use a combination of these 2 options for your complete funding solution. Many clients who don't have the cash required for the loan use a FranPlan to access the funds needed for the equity injection. This is a good strategy if you plan on opening additional units, so you have a reserve of available funds for future expansion. The FranFund experts offer a no-pressure consultation to evaluate your financial situation and make recommendations about the best funding solution for you. Our approach is very effective, and we were recently voted #1 funding provider in Entrepreneur Magazine's annual franchise industry supplier ranking. If you're ready to get started, just visit franfund.com and complete a quick questionnaire so we can accurately assess your options. After we receive your information, we'll schedule your free consultation to review our funding programs and determine the next steps. We look forward to working with you.